Yeah, good morning, good afternoon, good evening from wherever you're from. Welcome back, everybody. Welcome to the channel. It's in the morning and I'm beginning to trade. I'm beginning to analyze the market, but I want to take some short time to explain something to you. Most people begin trading and they want to trade. They've heard of range trade setups. They've heard of range trading. So they want to trade the breakout or they want to trade the breakout of a support zone. So what happened is that they enter the market takes them out and continue to wherever you want to go. So it happens most of the time. Maybe let's say there's a support zone here and you want to buy. You saw a breakout, right? You want to buy. The market will take you out, then continue. Or maybe there's a support zone you want to sell down. The day you sell, the market keep going up. The day you buy, the market keep coming down. This is because you don't know various varieties of the path the market can give you, because if you are learning any strategy, the market can give you several patterns, several varieties of that particular strategy. Let's say you're trading a breakout strategy. So you know that your strategy is a breakout strategy, but the market can give you different variations of this same setups, okay, different variations. So if you don't know the different variations and then you enter anyhow or you enter anywhere, then you're going to have a lot of stop out. So what you have to do is that you have to set up all the different variations. You must learn all the different variations and then you pick those ones which have high probability of winning. Okay, let's say you're trading breakout. You pick only those variations that have high probability of winning. And then when you take those high probability of winning, you'll be able to increase your win rate and then you become profitable. So for instance, the market is moving and you want to trade breakout, right? You've seen some support zones here. Some support zone, good. This is a very good example. You see support zone here. And what qualifies to be a support zone? You have two touches, okay? The moment you have two or three touches, it qualifies to be a support zone. So you see that you see support zones here. So you see first supports, right? First touch, you see second touch, and it qualifies to become a support zone since you have at least two touches. Okay, we can even add this one, making three, but we are adding this one, making three. So the third touch. So now you either buy down the support into the range or you buy when the support zone breaks. And then you saw this candle, you saw that this candle has broken the support zone. Can you see? This green candle has broken the support zone. So most people, what they do is that when they see that, they will quickly enter here. The moment they see the support zone is broken, they say, yes, the support zone has broken. So they quickly enter here. And then they put their stop loss somewhere here behind the support zone. And then they take profit about there. But what happened? See what happened. Because they did not wait for any confirmation candle, the market came back and took them out here. Can you see? Take them out and the market reversed back to the original direction where they were trying to predict the movement of the market. See what happened. What happened? What happened here is because the guy who traded here did not wait for confirmation pattern. If you're somebody who you decided to trade this particular pattern, you would have gotten a losing trade. Meanwhile, it could have been a winning trade. You waited for confirmation pattern. So when you see support zones, like this, support, when there is a break, don't rush to just go and buy because you think it has broken the support, so it's going up. No, don't rush to buy it because it can be a false breakout. You must learn how to avoid all these false breakouts using the different variations the market can give you. So the first thing you have to do is that when there is a break, you don't buy immediately, but you wait for the market to pull back after there is a break. Okay, you don't buy immediately. Wait for the market to move a little above and pull back into the support zone. Okay, and then when there's a confirmation pattern, now you take the trade. If there's no confirmation pattern, don't take any trade. Just let it go. Set for different pair and trade a different pair. It's better not to take any trade than to take a losing trade. That's it. If you don't take any trade, your account is still there, right? Your account balance is still there. If you have 18,000, if you have 30,000, if you have 10,000, or let's say even 7,000, 5,000 in your account, and you've not taken any trade, your account balance is still there. But the moment you begin taking trades and you keep losing, then your account balance keep reducing. So it's better you wait for a good confirmation pattern or a good setup before you take a trade instead of just taking any trade, rushing to take any trade, and then you keep reducing your account balance. Just wait for a good confirmation pattern before you take a trade. Don't be rushing. It's better not to take any trade than to take a trade and lose a trade. Please keep that in your mind. It's better not to take any trade than to take a trade and lose your trade. Because if your account balance is still there, if you don't take any trade, your account balance is still there. But if you rush to take any trade, which you're not supposed to take, or which does not meet a particular criteria, then it's likely that you're going to lose and your account balance keep reducing. So in such scenario, we must always wait for the market to pull back before you think of taking the trade so that you can avoid this particular breakout. Okay, breakout trading is very profitable, but if you trade it wrongly, then you're going to have more losses than wins. You're going to become a losing trader. You can't become profitable, because profitability comes not by taking huge one trade, no, but it's by getting more wins than losses, or average wins, average losses, and with risk reward, good risk reward, you become profitable. It's not about taking one trade. You take the trade from here. Wow, you say, wow, I entered here and I got this whole big trade, big movement. How I catch a big movement on Euro USD, how I catch a big movement on pound AUD. Guys, that's not how we trade. You get a big movement one day, you also get what? A big whipsaw. Your account will be whipsaw one day. So follow a particular strategy, okay? So if you're trading breakout, wait for the market to give you confirmation pattern. The market breaks out, market give you confirmation pattern, and then you take the trade. But breakout trading can even be traded in two ways. One, in the direction of the trend, and two, in ranges, if you're trading breakouts. Okay. So let's say somebody wants to trade in ranges. So if the market is in range, push, retrace, another push again. And then now you get two support areas. So what do you want to do? You want to trade the range, right? So in such scenario, when the market push through the support zone, you wait for the market to pull back again, and now you can now buy, and then you can buy the breakout, which will become very profitable. But there's other ways such that it's in the direction of the trend. Okay, I think this particular one too is in the direction of the trend. So you can see that support. You can see the market was trending up, because you can see lower. Can you see lower highs? Can you see lower highs here? Lower highs. Can see lower highs, which means the market was trying to trend. So which means this particular range is in the direction of the trend. But sometimes the range will be just a range market, and when you buy the breakout of the range, and then you ride the market up. But sometimes the market will just be rangy, which means when you wait for the support zone to break and the market will trace back to the zone, then you take the trade. So always the key is what? Always wait for the market to trace back to the zone before you think of taking any trade. Let me see if I can see another example to show you. So at this part of the chart, as you can see, there was also support zone. Can you see support zones here? So now you want a breakout, right? You saw that the market broke the support zone through these big, huge candles. Can you see? Are you going to enter immediately? Are you going to enter immediately somewhere here or somewhere here? Where will your stop loss be, guys? Before you enter it, ask yourself, where will my stop loss be? You can't enter with this big candle. What you have to do is that you wait for the market to pull back. Can you see the market pull back to the zone? And there was a confirmation candle. Which confirmation candle pattern is this? This is what? Bearish engulfing pattern, right? Can you see? Bearish engulfing pattern. So the moment you see the confirmation pattern, which means the breakout is now valid. So you can now be confident and take the trade, because there is a confirmation pattern. So if you are supposed to take this trade, where will be the best place to enter? After the pattern. Where will be the best place to put your stop loss? Behind the structure, the breakout structure, and take profit 1:2 when you're out of the market. You see the difference. The first one, the guy who is trading that one, trader A, will decide not to wait for any confirmation. The moment there's a breakout, the person will buy. Fine. Assuming you did the same thing here, you would have gotten a winning trade, but this is by chance. The other one was a losing trade. Most of the time, if you do that, you're going to have most of them to be losses. But if you wait for confirmation pattern, every time when you wait for confirmation pattern before you think of entering the trade, you're going to increase your win rate. Win rate does not matter, but if you have a good risk reward and a good win rate, it's going to make it more profitable, because you must at least have more of them to be wins, or at least equal of them to be wins. Okay, so always, for you to avoid the false breakout, you must wait for one confirmation pattern. Don't just buy when the market just break with one or two candles. No, wait for the market to pull back to the zone, and then when it gives you a confirmation pattern, you take the trade and you take good risk reward. Okay. So I think that would be all for this video. It's just in the morning. I'm trading, but it just came to my mind that I have to explain this concept to you, so that most of you guys who have been having a lot of losing streak, you just buy the market, take it out. You just sell the market. Like the market is tricking you. When you pass, the market tricks you. When you pass, the market tricks you, and you begin to wonder, am I even doing the right thing? You begin to wonder, am I even doing the right? It could be that you're doing the right thing, just that you've not mastered this basic technique. Okay, the concept is there. Breakout trading strategy is there. But you have to master the simple technique, the simple varieties the strategy can give you, and you know which one to take. You know that sometimes the market can just break out, right, and then reverse. Sometimes you don't reverse. Just take only those which reverse with candlestick pattern. We have those who break out, never reverse. We have those which break out and then reversed but does not give confirmation pattern. Don't take those ones, because those ones they can also go back into the range. Take only those ones that reverse with what? Confirmation pattern. Those ones are the one with higher probability. This is what we call higher probability trading. Take trades which has high probability of winning, because in trading we trade with what? Probability. We are not certain. Nobody knows what's going to happen in the market. Nobody can tell you. If somebody say that, hey, I'm sending you a signal and this is what's going to happen in the market, the person is a lie, because nobody, you cannot even control one or two people's emotion. How much more about millions of people's emotion in the market? You can't tell, but you can predict what the market can do next. So in trading, we use prediction and probability. Okay, there's a high probability that the market may do this. So you have to take trades which have high probability in your favor, not just anywhere. Take trades which have what? High probability in your favor. And if you do that, you get most of them to wins and less to the losses. With good risk reward, you definitely become profitable. If you enjoyed the video so far, hit the like button, subscribe to my channel. Just help me to grow my channel. The channel is very small, so anytime you watch the video, just hit the like button and just, if you're not subscribed, just subscribe to my channel. Just help me to grow the channel, okay? Because I spend time to put such videos. You see, I'm trading how to pause and shoot this video for you to see, because I remember that most of you guys face those challenges, so I decided to pause my trading and now shoot this video, now record this video and now put it here for you guys to see. So anytime you watch the video, just hit the like button and subscribe if you're not subscribed, just to also motivate you to keep putting such videos here, okay? Because trading and recording videos is a little hard. Sometimes when you are trading, an idea comes to your mind, you want to help somebody out there, so you try to record a video and you put it so that anybody out there will just be able to see the video, also stop losing their money. Because in trading, how much you gain does not affect me. If I make $10,000 and you also make $10,000, it doesn't affect me, right? Because we are all traders. And if I make $50,000 and you also make $50,000, it doesn't affect me. If my account is small and I make $5,000, you also make $5,000, it doesn't affect me anyhow, right? Anyway, and the more I even teach you more of my strategies, the more my strategy becomes more valid. Because some people say that they shouldn't be teaching their strategies, but it's a lie. If you don't teach your strategy and more people should buy into the pattern, then how can you have a winning trade? Let's say that this strategy I've taught you and you decide to trade them, right? So let's say at first it was maybe 1 million people trading the same strategy. Now we have more people, more than 1 million trading the same strategy. What's the probability of the strategy winning? Because everybody is going to see the pattern and buy, which is going to increase more of your trade to be more profitable, right? Because now everybody is trading the same strategy. So when people trade the same strategy, it does not mess the strategy up, right? It rather increase the win rate of the strategy. But some people will say that, oh, I shouldn't teach you my strategy. No. And it's not about the strategy. Even if I teach you my strategy and you don't learn it well, then you cannot trade it, right? Yes. But the moment I teach you the strategy and you master it and everybody is trading the same strategy, it rather boosts the win rate of the strategy, because everybody has seen the same pattern. And the more people buy the same strategy or they use the same strategy to trade, the more the win rate of the strategy increases. So that's why it's good when you also share your strategies. So I'm always happy to share my strategies. I'm always happy to share my teachings with you. But make sure that when you also watch the video, you hit the like button and subscribe to the channel. This is Towards Your Mentor. See you next time.